Hi, Larry Gaines, PowerCycleTrading.com. Well, if you're not using seasonality and taking the benefits and the advantages of what seasonality offers you, you're really missing out on a great trading edge. So in this video, I'm going to show you the importance of following seasonal trends. So this is a seasonality continuation chart for the June S&P 500 E-mini contract. And what you can see here, you can see my pointer. This, over the last 15 years of this data, had a tendency to pull back as we head into the kind of the end of March. Okay, so we're right here. And that's, currently today. And so the tendency is for it to pull back, all right? And then you get a nice potential rally when we get into end of March, early April. So that's something that you can take advantage of. Here's another chart to illustrate it. So this gives you the benefit to, plan your trading strategy. And here's another one. This is also the June S&P E-mini going back 5 years, 15, and 20 years. So you can see the tendency, seasonal tendency is again, over this period of data, is to pull back and then have a pretty nice potential for big rally as we get into the end of March into early April. And here's one more data points based on seasonality. So this is a study going back for 4 years from 2015 to 2019. This goes back further, but I just pulled up this past 4 years. And what this is telling you is that percent of the months in which the SPY closed higher than it opened from 2015 to 2019, when you're in March, it's only 40% of the time. So you can see that the seasonal trend is to pull back and be weaker in March, and then potential for a big strong week April and May. So when you use the seasonality trends as kind of an overlay to give you direction for the big trend, then you trade it with your directional trading indicators or whatever. We use a cycle model here, and you could just see that the market was struggling up here at this is the SPY at 280 or 2800 for the SPX. So having that struggle, and then we also had what we call a volatility squeeze on the 4 hour. So the probability based on that seasonality studies or statistics I showed you was this to pull back and break. So we had a great setup for a short trade yesterday right here, breaking 278. So we set up a put debit spread and got a really nice reward for that. So yesterday when we were breaking 278, we bought the March 15 series 278 puts, $2.54, and then when it sold off, hedged it, converted it to a put debit spread by selling 275 for $1.75. So you can see now, today this is up over $110, $111 on the put debit spread. So the risk though of getting into this yesterday was 79. We've got, if we hold this into expiration, max potential profit 221, and the whole part of reasoning for doing this was based on those seasonality statistics. So I hope this helps. Talk to you in my next video.